Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This technical analysis update is for February 17th through February 20th. Now, the reason why it's February 17th and not the 16th, folks, is many of you know the markets are closed for the President's Day holiday on Monday the 16th, and that is why we have it for the 17th through the 20th. Now, as we get into things today, folks, we're going to start on the smaller time frame and work our way out. I really want to focus on the charts here, as the charts have been telling the truth on continually for, well, time essentially, but really very clearly over the past couple weeks. And we're going to start with the 10-minute SPY chart, and again, that's the spiders, mirrors of the S&P pretty well here. And what you could see here on Friday and Thursday, and this is Thursday over here, Friday over here, is that we did see the market continue and consolidate off of that monstrous move on Thursday afternoon at 3 o'clock. Now, the interesting things that I want to mention, and then we're going to draw on our trend lines and show how every point on Friday, whether it was the high here, or the low here, could have been predicted by taking the lows or the highs or key points on the Wednesday, Thursday chart and extending their trend lines. Okay, so first of all, let's talk a little bit about what happened here, folks, because this was the big move of the week in my opinion, and the consolidation that followed on Friday is very interesting to note. Especially, we should touch on this candle right here. Now, what happened here, folks, was we had a double bottom on the chart in the late afternoon, and you can see that right here. All right, very beautiful double bottom. And what you could see here is the tails are telling you something. Look at the volume increase right here before the announcement from the Obama administration that they might subsidize loan payments on mortgages. Now, as of now, it doesn't look like it's a very probable thing, but it was enough to kickstart a short squeeze in this market. Now, the key here is this, folks, and this is something I find so fascinating in the markets, and I think it's very important to let everyone know, because you have to understand what type of field you're playing in. What type of game are you playing when you're an investor or a day trader or a swing trader? This was telling you that people knew the announcement was coming. Essentially, why? Well, because you're seeing volume increase here. You're seeing sellers come in, and it was so interesting because in the chat room we were watching this, and they were selling. We were below the breakdown line, and then all of a sudden buyers would come in and push it up. Selling, buyers again, pushing it up. Multiple times intra-candle, and then again on this candle you actually got way below, and then all of a sudden buyers came in, and then the news came out, and we shot up into the short squeeze that continued into the end of the day, and then you saw the consolidation move on Friday. Now, that's just something I want to make sure everyone knows. I mean, essentially that news leaked out early before the markets officially got them, before you started this rally, and that's why you were seeing that double bottom hold up so beautifully, and you got the tails here, okay? So I think that's just something fascinating, and it's something we all need to know. Don't think that you're the first one on the news of when you get news out. You're going to be the first one in a play, whether it's a stock play, a market play, a gold, whatever it might be. You're not the first, and understand that, folks. People have positioned themselves, and again, I'm not letting the cat out of the bag here. It's telling you in the charts here that it was known prior. Okay, now let's draw our channels in and our levels so we know how this market came to pass. First of all, let's take this line right up here. Take the high from Wednesday afternoon and just extend it straight over. Okay, let's extend that right over, and there you go. So all of a sudden you have in the market here, you extend this line straight over. This is the high point where the market's going to come into fruition. Now also what you want to do is extend that line even further. So we'll just extend that even further here, and there you have the tops. So this line taking from the point on Wednesday's high, very, very important in this market, okay? And that turns out to be where we top out in this market. There's also another line that's going to actually intersect right there that I'm going to show you in a minute. But I just want to show you more than anything how you can use the charts to your advantage, educate yourself so you know the key levels to sell into when you get them. Now take this line right here, folks, all right, and extend it to this high on Thursday. All right, let's do that. Take that and extend it right through. And what we're going to do is we're going to extend that even further on this chart. Look at that. Right to that point. Okay? So you basically have this point being a key selling area. When you have two lines crossing like that and you have price trading up, if you don't sell there, you're insane, to be honest, as an intraday trader in this market. Now remember, this can work on the weekly, the monthly, the daily charts when you have these intersecting lines, and you can draw them yourselves. We do this more in the research center, the premium service that we provide, but I like to show all you guys what we can do based on the markets, okay? So in any case, those are a couple lines. Now what I want you to do is take the high from the opening candle on Thursday, extend it to the high of the day, and look exactly where that intersects. The high point, the high of the day on Friday coincides with the opening high of this candle on Thursday and the high of the day. Just draw that right through. These lines should be drawn in prior to the day on Friday, so you have all your lines drawn in. All right, and we continue to do this so accurately. Now, what I also want you to do is take this point right here, extend it to the, let's see, we'll extend, actually, we're going to take this low. Let's try this one right here. This low on the sell-off consolidation pattern. So on this consolidation pattern, take this low point where the market sold off to before rallying into the close on Wednesday, extend it through the high of the day again, and note a lot of things are going right through the high of the day. And what you're going to have here, and again, let me just redo that so we have it accurately. All right, extend it right there through the high, and you have it exactly, notice that. So you're taking the low here, extending it right to that point, and right through, and you get the high point on this consolidation candle before the last push up on Thursday, excuse me, and then right through the low here, which happens to coincide with the 50 moving average, so that's another level, and then right to the end of the day. All right, so that's another level that you want to watch for. Now, the last thing what you want to do here, just to get the opening levels of the market, take this point, the high of the last push of the day on that, and just extend it right over. And there you have your range for the opening in the market. So here's just, there's a bunch more, guys, but I don't want to take up too much time as we're already 6 minutes into this video. But there's a bunch of lines, but notice how you're picking the lows and the highs in the market, and this line, especially this straight one across, and this one that intersects will give you the high of the afternoon, and this one that coasts right up gives you the high of the day. All right. So again, just use your levels, educate yourself, become a better trader. That's what it's all about, folks. Now let's go to the 60-minute. Now 60-minute is very interesting because you actually had some beautiful trend lines here, and I want to just use them to our advantage. So let's draw them in. Extend it right through the high of that candle. So you're taking this high candle through this high candle right here, the next push up, and extending it right through gives you the high of the day there. Now, in addition, what you're going to want to do is you're going to want to take these different levels and just draw them right in. All right, so we draw it to that point, gives you the high there. All right, we can draw in this one and there, and I'm just drawing in these lots of different candles here. Draw it straight across, gives you the lows. So again, what you're seeing here is this one connected to this low gives you the high point over here. This line to this high right over here and connected right through gives you the high point right here and right here. All right, and these all are connecting through to showing you basically where you're going in this market. All right, and the 60-minute, nonetheless. I mean, I don't want to go into the 60-minute as well. You can also see this resistance point right here. Notice how you have all these little wicks up here, right here, here, and here. Draw that line straight across. You get again crosshairs on the market right here, here, and here. All right. In addition, you have this little bit of area right here. Draw it straight across. And you have the lows basically in there, and you want to even extend that further, and you can see how imperative that line is going all the way over. So you have the highs here where it doesn't break below here. You have tails below, but you never get a close below, and you can see how this line is a big support line. So the market, that's what that consolidation was on Friday, trading between this upper line and this lower line. And believe it or not, that last candle, that sell-off, that was a lot of it was based on the stimulus bill that the Senate had to vote on that evening last night on Friday, and basically the market wasn't sure that it was going to pass. So you saw a lot of selling into the close, profit taking off this big up move. Now it's going to be very interesting to see the futures and how they come into play on Tuesday, I should say, when we get back to market activity. Now this is the 360-minute chart, and I put this up because I want to go back to November lows. This is back to November lows, folks. This is actually the 420-minute chart, and really this line is something I want you all to watch for. This is the keys, guys. I'm going to tell you the keys. This line right here, this line breaks, and look, we were below it at one point, but they saved the market on that rally on Friday. Don't think the big boys don't know how important this line is. They saved it, then on Friday we closed right on it. You watch this line. If this line breaks, be very cautious on this market. In addition, you can take this line and just draw it through the high there, and you get a possible target if we were to break up for where this market would meet major resistance. There's a bunch of places along the way as well, but as I've always said, you just want to focus in. There's another resistance line as well coinciding with the 50 moving average. But this line is so important, guys, so important, going back to November lows, basically to the lows in January and right across through the lows in February, that you have to watch. This breaks, be very cautious in this market. Other than that, as long as this holds, you have to have a positive bias in this market, okay? So that's the way we'll leave it at this point. Keep in mind, guys, we didn't put up I haven't gone over the earnings and economic alerts in this video because now on our website under our free services, we're going to list them all by Sunday night or so. So you can go in there and view them all on that page. Also, keep track of the free blog, guys. Amazing free blog, amazing posts intraday, articles, you name it, all the stuff our traders are putting out, charts, you name it, it's there. Take care.